What is good, everyone? I hope everyone had a good weekend. Sorry, this is coming a little later than I planned for initially, but after a week where my brain got racked by the market, I kind of wanted to just enjoy some time away from price, recollect my thoughts, come back at this with as fresh of a mind as possible. Um, and that's exactly what I did. So let's hop into it. So we have the weekly price in front of us broken down by days at the digital open, so 1800, so Sunday into Monday, Tuesday, Wednesday, Thursday, Friday. Um, some annotations on the chart for the SMT. Really coming into the week, what I was looking for was in this leg right here. We had that sharp high put in last Wednesday post CPI. And I was looking at the projections from the 15-minute and the 4-hour order blocks. We had 4.5, 4.5, and 2.5 of the 15-minute, 4-hour nested at CPI lows. So that was a high probability target, as well as 4.5 of the 4-hour nested on monthly open. And because of the time level, that also makes it a high probability target. As we know, price will like to gravitate towards high time frame opens. Now, coming into the week, everything I do when I set expectations comes down to Fib projections. So for me, when I look at the weekly standard deviations, I was looking at the week not having enough upside manipulation to get me down here. So I was initially looking for higher prices, as you guys know. So hopping into Monday. Monday we had daily SMT at the lows. 1045 creates that. I believe I'm in the 5-minute. This one. So we had SMT even on the 955, and this is where my long was in here to get to the daily open. Got stopped. That was Monday. I wasn't necessarily too interested on Monday, so that's okay. Into Tuesday. Tuesday is where I was getting a bit pig-headed, right? And I wasn't listening to the information that was being presented to me when it was being presented to me, and that was my biggest undoing here. And that's not to say that anything I was looking for was invalid. It's simply that I picked a bias beforehand and stuck with it regardless of what this chart was showing me. Now, what this chart was showing me is that we come down, we're making SMT. We have SMT almost every single day this week, a daily SMT pre-market, and it got violated every single day besides Friday. So I'm not going to sit here and tell you that the decisions I made were poor. It's that I found confluences that fit my bias and shut out the ones that opposed it, right? And that was my mistake. Making my decisions wasn't the mistake. The criteria were there. Being closed to the opposing information is what cost me money this week. Now, I came away green, but I could have had a much better week had I been making better decisions, specifically on Tuesday, Wednesday, and Friday. So my opening projections didn't get met. We had SMT at the lows. Did we get fractal SMT? We did. We also got fractal SMT at these lows, which would make this a breaker, as well as this a breaker. Okay. So my bottom side projections didn't get met. I have SMT. I could logically look higher. Now I was looking at these 2.5 lining up with the daily high projections to take us lower, maybe even getting up here and then taking us lower. That's what I was looking at. Now, this was actually the day I was on stream with Bray, and on stream, as I was watching this 15-minute print, even though I was looking for long still, I saw this S&T come in, and then I was looking to long this up here. That's what I was looking for. Sweep this long here. I wasn't expecting this candle closure to close like this, us displacing below this 4 o'clock low. With these consecutive candles, confirms a high time frame breaker / order block, and I just ignored it initially, and then even on stream, right when I saw this, us printing this 915 wickless candle into the fair value gap right before the open, when we had SMT at these highs, I was like, oh, I wouldn't be surprised if this 15-minute fair value gap sends us lower. Where my mistake comes in for the day is actually in this high right here. This high is actually high of the day on ES. High of the day. And my mistake was simply not recognizing that information. At the time, we're trading into a fair value gap created at 9:30. Respecting previous day low. Even if I'm not trading this candle, once this candle closes, I should be short. Once that candle closes, I should be short because I have logical targets below us. I have logical targets on the weekly open, and I have logical targets from a liquidity perspective and the monthly candle opening price perspective. So I have logical targets lower. I was simply fighting the market, and that cost me money. Moving on into Wednesday. Wednesday, in my opinion, was the easier day to miss. I shouldn't have missed Tuesday. Wednesday, it gave a similar signature, but there was more conflicting data on this day. So I'm not upset with me missing this. So again, everything I do is based on projections. So when I look at first candle makes the high, this is a signature I hate. First candle at 1800 makes the higher low of the day. Those projections have been met. We have SMT at the midnight open, with breaker with the midnight open. That's running up into 2.5 deviations. So we can logically expect a retracement into this fair value gap or this liquidity pool, and fair value gap back into the breaker. We got SMT at these lows, while also confirming the breaker. Now this is where this information became, contradictory. You have SMT at the highs, SMT at the lows, SMT at the lows inside a PD array, SMT at the highs at a PD array, right? So this is as 50-50 as it gets in my book, but obviously, in hindsight, you still have logical projections lower. You're in a downtrend, prospectively, right? So, shorts win here. Cool. All good. So I believe I took a loss in the morning, longing somewhere in here. Trying to long daily high with this S&T. I stopped here, just got fucking dumped on. Moving on, I did catch a long later in the day, here to here. Now Thursday was another mundane day for me. So we had price run the PM high overnight, barely, which to me this looks like equal highs. And then chop in this range for a bit. So same thing, I was likely looking for a sweep on one side to target the other side. got that here with this order block. I longed this. This is probably also what I shared with you guys that day. 5 minute. Yeah, I shared this 5 minute candle right here. Time was good. Turn of the hour. Put in an order block. Open of the hour, soups it, displaces higher, right? Now there was SMT that was here. SMT started getting Korea with YM at 6 o'clock. It just kept getting ran lower. So once I saw this energetic reversal signature, for me, that's what I was looking for to confirm it. This confirmed on multiple time frames, so I was comfortable with that. Now, one thing I didn't listen to was the time of this reversal, which was 10:30. 10:30, 1:30, 2:30. These are all like 9:30, 8:30. Those are all high time frame high probability reversal time frames. You have the news embargo. 8:30 is the most common AM news driver. 9:30 is equities open. 10:30 is the 4-hour candle that takes up most of the New York session, right? 1:30 is post lunch, so setting up a PM trend. 2:30 can also serve the same function. So those are your most high probability reversal time frames. So seeing this signature at 10:30, which day is this? This is Friday. Seeing the signature like this at 10:30, not what we're looking for. Now the same thing happened to me at the end of the day. So at the end of the day, I was in this long. This is a 5-minute order block. Souped it. I'm in this candle, right? This is a 15-minute fair value gap. Let's go here. That's a 15-minute fair value gap. What I'm not looking to see at 3:30 is us paint 0 candle bodies above this 15-minute, which the 1 minute and 15-minute are practically aligned. So I'm not trying to see any. If I see no candle bodies closure above and then create an accumulation and then a breaker, that is not something I want to see when I'm in a long trade, right? So timing and signature, even if it's fractal, can tell you a lot. And then Friday's another day where I simply just dropped the ball. I should have made money here. Should have made a lot of money here. All week we're getting daily SMT at the lows with YM in one direction or another. The only day we had the fractal SMT was Monday and Tuesday. Monday into Tuesday. NQ took the low on Monday, failed to take it on Tuesday. That's why I was looking for higher. Okay. On Friday, we flipped a signature for the first time all week. NQ failed to take the low and then took it on Friday. Then we put in this super bullish move, and I should have been buying the digital open, this fair value gap, the higher time frame hourly fair value gap, higher time frame breaker, higher time frame. I should have been buying something in here, and I wanted it lower, and that cost me a lot of money today on Friday. Now, I don't think before Powell and Trump I would have taken this trade here, because if you look at the 15-second chart, and this isn't because I'm telling you guys to trade the 15-second chart, this is me explaining to you guys the risk of this. If I'm here trading off this, right, which is where I would have been trading from, that is a 57-point stop from the top. Now this candle right here, this first 15-second candle is 170 points, right? So the reason I wouldn't have taken this, let's see if I can even break it down on a 1 second chart. These 1 second candles are 30 points, 40 points, 40 points. So from a risk perspective, I'm not comfortable with taking, you know, this entry without having my stop down here, simply because of the possibility that my stop can get slipped 30, 40, 50, 60 points. And to me, that risk isn't worth it, right? And then also for me personally, I wasn't looking to have a $190 stop. I would have wanted it lower, right? So I messed up by not taking 930. But yeah, that trade before Trump and Powell, there's always the risk of slipping. So participating in that market, you need to be very forgiving with your stop loss, because even though you might be sizing your risk appropriately, that stop loss only matters if it gets filled at that price, right? Which is not necessarily uncommon in the futures market, but for me, it's not worth that risk. So now that that's over with, let's get into... delete all this nonsense. Let's get into some higher time frame stuff, what I'm looking for the week. Start with the daily. Okay. Apparently I can't highlight these. Anyway. Alright, so Monday is really going to be our decision. We have tapped into opening price, which was an order block. We've created the SMT in there. We ran out sell side. Right, here's your SMT at that high time frame point of interest. Right, I'm not going to shift my opinion on anything until ES or NQ takes this high. So I'll be looking for ES or NQ to take that before if ES takes this high and NQ fails Friday high while we're in this fair value gap, then I consider lower prices. But for me, I'd like to be looking at higher prices simply because of the way this candle is printing. Is it's opening, it created its wick, it made its move, it came down to retest, now it's going back higher, right? So for me, I'd expect this upcoming week to trade into these pools of buy side. So high resistance makes low resistance, then it gets ran. So that's what I'd be looking for. Key levels would be this to queue off of. And then as far as upside targets, I'd probably just measure this order block. This is where I'd expect price to start to gravitate towards. right here, two and a half standard deviations. So 24,400, 24,500, 600 ish. Yeah, 24,400 to 24,600. That would be my draw over the next couple of weeks. Now, low time frame, that inverse fair value gap lines up with this breaker. So I would just expand this POI actually to this. I'd be looking along out of here. And if we didn't get down there, I'd be looking here. Let's clean this up. So that's really what I look for. For me, start the week off is going to be this range right here. I'm not going to re-annotate that low there. So this range, right, can be lower to go higher, higher to go lower. All right, I'd prefer higher to go lower to go higher. That's what I prefer. We'll see what the market delivers. And then we'll start to see what we're printing when we're up into this liquidity. It's kind of all it's going to be. That is going to be it for me, gang. Hope this was helpful. Kind of just broke down the week at a glance and give you my thoughts for next week. Please, if you guys have any questions about criteria I'm looking at, you want things explained, any questions about price at all that you'd want me to explain for you guys, whether it be in short form or long form content, please just let me know. Leave a comment, shoot me a DM, whatever it is. Tweet at me, whatever. All right. We'll talk soon in the Telegram. Y'all be good. Peace.